In 2025, India completely flipped the switch on its massive crypto market. Seriously, what was once a wild, unregulated space is now one of the most tightly controlled in the world. So in this explainer, we're going to break down exactly what changed, why it all went down, and what it means for the future of digital assets in, the world's most populous country.
Okay, so let's just jump right in with some of the numbers that really paint the picture here. By March of 2025, you had 49 crypto exchanges that had officially registered with India's financial watchdog. Now, this wasn't just some friendly suggestion, it was a mandate, and it brought dozens of these platforms into the formal system, many for the very first time.
And what about the ones who didn't comply? Well, India's Financial Intelligence Unit, or FIU, they did not hesitate. They slapped non-compliant exchanges with $3.1 million in fines. The message? It was crystal clear. The old way of doing business was officially over.
So how did we even get here? Well, for years, crypto in India was just chaos. It was a legal gray area that wasn't officially banned, but it wasn't really recognized either. Then, in 2025, the government finally stepped in to draw up a real blueprint, moving to bring some serious order to the industry with a formal regulatory framework.
To get a real sense of just how big this change was, you've got to understand what things were like before. We're talking about the Wild West era. This was a market with enormous potential, for sure, but also some absolutely enormous risks.
I mean, just look at this. The difference is night and day. The entire industry went from this tangled, super high-risk environment to a structured, regulated one. And believe me, this wasn't just a minor tweak, it was a complete overhaul of the whole ecosystem.
So what were the actual dangers lurking in this unregulated space? Well, without any kind of official oversight, this gray zone became a breeding ground for some very, very serious criminal activity.
When regulators started digging, what they found was pretty alarming. These unregulated funds were being used for a whole range of crimes. We're talking about money laundering, those informal hawala money transfers that totally bypass the banks, widespread scams, terror financing, even payments for services on the dark net.
All right, so with all that going on, India needed a fix, and fast. Their solution? Empower a single authority to bring order to the chaos. And this is where the Financial Intelligence Unit, the FIU, steps right into the spotlight.
Now, this is actually a pretty big deal, because unlike in a lot of other countries where you've got multiple agencies tripping over each other, India said, no, one single point authority. Its mission was simple and clear. Register every crypto service provider and monitor them for any suspicious financial activity.
So here's the crucial point. All of a sudden, crypto exchanges were subject to the exact same strict anti-money laundering rules that banks and other traditional financial institutions have been following for years. This was the legal lever that just changed the entire game.
And this brought a whole new and very long to-do list for these exchanges. First, they had to formally register with the FIU and appoint dedicated compliance officers. Then, they had to perform detailed Know Your Customer or KYC checks on all their users. And on top of that, they were required to actively monitor transactions, report anything suspicious, run internal audits, and screen everything against international sanctions lists.
Okay, so we've talked about the rules, but what did all of this actually mean for people? This overhaul had very real consequences for everyone involved, from the casual investor all the way up to the largest global exchanges operating in India.
And if you look at who actually registered, it tells a really interesting story. Now, the vast majority were domestic Indian companies, as you'd expect, but look at that. 4 of them were major offshore platforms. And that shows you that even the big global players decided that playing by India's new rules was way better than being shut out of its massive market.
So for you, the average user, what's the deal? Well, on the one hand, you get a whole lot more security. There are stronger safeguards, and the risk of your exchange disappearing overnight is much, much lower. The trade-off? Well, you're looking at stricter sign-up processes and, yeah, the possibility that exchanges might pass on some of their higher compliance costs to you through slightly higher fees.
And what about for the industry itself? For the exchanges, sure, the costs of compliance went through the roof. But the upside? Oh, it was massive. They gained real regulatory legitimacy. And for the first time, there was a clear path for big institutional investors and fintech companies to get into the space, something that was just impossible in that old gray zone.
Okay, so it sounds like everything's sorted out, right? Well, not so fast. Despite all this progress, India's crypto story is far from over. There are still some major unresolved questions and, let's call them, institutional tensions. that are going to shape what happens next.
You see, you've still got this major tug-of-war going on with India's central bank, the RBI. They have been skeptical of private cryptocurrencies for a long, long time. They continue to warn about risks to financial stability and have made it pretty clear they'd much rather develop their own central bank digital currency, the digital rupee.
So what's next on the horizon? Well, the next chapter of regulation is already being written. The conversation is moving beyond just preventing crime and is now about building a true framework for the future. You can expect to see new rules targeting stablecoins, the tokenization of real-world assets, and a lot closer coordination with global bodies like the IMF.
Look, at the end of the day, you have to understand this. The 2025 crackdown was not a ban, not even close. It was all about pulling the industry out of that regulatory limbo for good. The government has drawn a firm line in the sand, basically saying innovation is welcome, but only if it plays by the rules.
And that leaves us with the million-dollar question, doesn't it? Will India use this new regulatory clarity to become a dominant force in the global digital asset economy? Or will its deep-seated caution mean it remains a careful gatekeeper, just watching from the sidelines as the technology evolves somewhere else? The foundation has been set, but what India decides to build on it, well, that's still to be determined.